remote working and workforce education and communication. We've modified rosters at a number of our operations to reduce the amount of travel and to allow for the self-isolation periods. And as announced in April, we've also established a 20 million Australian dollar community support fund to support communities in the jurisdictions that we operate. Slide 5. Our most recent quarter was another period free of fatalities and life-altering injuries. We've now been fatality-free for 4.5 years now, and you can be sure we'll continue to apply our efforts to keep it this way. Slide 6. Like our commitment to safety, we see sustainability as core to the long-term success of Newcrest. We believe the business imperative is straightforward, that sustainable outcomes underpin successful operational outcomes and shareholder value creation. Newcrest is now ranked in the top quartile of metals and mining companies in the Dow Jones Sustainability Index. This has been a really important achievement for us. Our aim is to relentlessly innovate how we operate, to improve energy efficiency, water management, and our impact on the environment to ensure that we remain a sustainable business for the long term. Turning to slide 7. We have a diversified portfolio providing exposure to 4 Tier 1 ore bodies plus a potential 5th at Red Chris. Cadia is a world-class operation. It has substantial annual production now and well into the future. During the year, we narrowed the guidance range for Cadia to its upper end to between 800 and 840,000 ounces of gold this financial year. Cadia is also one of the lowest cost gold mines in the sector, having reported a low all-in sustaining cost of $137 per ounce in the March 2020 quarter and $132 per ounce for the 2019 financial year. Importantly, it also has a long life at approximately 24 years of reserve life. Lihir is one of the largest gold deposits in the world. With 23 million ounces of gold reserves and 49 million ounces of gold resources, this one mine has more ounces than many gold companies have in their entire portfolio. And importantly, Lihir is generating significant free cash flow for Newcrest. Over the last 3 years, it's generated more than $300 million of free cash flow every year. Telfer is a large gold producer in what is now becoming a highly prospective region. The real value I see at Telfer is in its established infrastructure in a very remote area. Its camp, process plant, gas pipeline, power station, and airport place us in the prime position to participate in new discoveries in the region. One such exciting example is the Havieron discovery. We currently own 40% of it through a farming agreement. As we continue to invest in drilling of the ore body, we'll be able to increase that position up to 70%, and then we can buy another 5% on market to take it to 75%. Studies are underway to potentially start an exploration decline by the end of the calendar year or in early 2021. This will help us to better define the ore body. We're considering both selective and bulk mining options and see the potential to achieve commercial production within 2 to 3 years from commencement of the decline. The drill results we're seeing at Red Chris lead us to think that we have another Cadia on our hands, with some of the results to date containing higher grade than we've ever seen at Cadia. The recent discovery of a high-grade zone, which is in addition to the high-grade pod that we announced in March, continues to build on the impressive drill results we've seen today. Drilling will continue to search for further high-grade zones in the ore body. We also hold a 32% interest in the Fruta del Norte mine through our investment in Lundin Gold. Fruta del Norte is a Tier 1 gold mine that went into commercial production in February 2020. We also own 50% of what we consider to be one of the world's premier undeveloped gold-copper projects in Wafi-Golpu. So we have 2 world-class operating assets in Cadia and Lihir, significant exposure to the Tier 1 Fruta del Norte mine, a near-term high-grade opportunity at Havieron with established infrastructure nearby, and 2 of the world's most exciting growth opportunities in Wafi-Golpu and Red Chris, with both being unlocked by our technical block caving expertise. This is a portfolio with decades of low-cost, high-margin operations ahead of it. Moving to slide 8, We've been one of the few companies in our peer group not to modify our production or cost guidance for FY20 as a result of COVID-19. We expect to see production of 2.1 to 2.2 million ounces of gold, plus 140 to 145,000 tonnes of copper in FY20. If you go to slide 9, as I'm sure you will have seen, we recently acquired the financing facilities for the Fruta del Norte mine. This investment provides us with a very attractive investment return of anywhere between 6 and 11%, depending on the gold price assumption. In addition to the model returns, it significantly strengthens our position in the asset. The finance facilities provide us with an additional 34% of the free cash flow generated by the operation over the next 5 years, which is clearly in keeping with our strategy of adding exposure to Tier 1 assets. Go to slide 10. As our investors are aware, we've always taken the view that it's prudent to maintain a strong balance sheet. For more than 10 years, we've funded our investment and growth from our cash reserves and free cash flow. Last month's equity raise allowed us to fund the purchase of the Fruta del Norte funding facilities and help fund our other growth opportunities, such as the construction of declines at Red Chris and Havieron, while maintaining a strong balance sheet. We're building a company which will excel through the price cycle. At the end of March, Newcrest had liquidity of around $2.8 billion, which included $1.4 billion in cash and a further $1.4 billion available through our committed bilateral facilities. If you go to slide 11. Last week, we refinanced our long-term debt at a lower coupon rate than our existing corporate bonds. This has allowed us to align our debt maturity profile to our long-life assets. This slide outlines our indicative new debt maturity profile. We go to the next slide. This graph shows where Cadia and Lihir reserves sit relative to the operating mines of Barrick and Newmont. Large ore reserves are extremely rare. In our gold major peer group, Cadia and Lihir are the only two operating assets with more than 15 million ounces of gold reserves. This enables us to be patient with our capital and gives us the space and time to make decisions on terms which align with our constant focus on cash generation and shareholder value. If we go to the next slide, with this in mind, we understand that gold reserve size or gold production in and of themselves are not a proxy for value creation. Instead, we focus on generating the most cash possible from our asset base. If you go to the next slide, this shows our technical capabilities, or some of them, which are listed on the slide, which enable us to mine and process virtually all gold and copper ore bodies. Newcrest is one of only 4 mining companies worldwide and the only gold company that designs, builds and mines large-scale underground block caves. This is a distinct advantage in an industry that's faced with mining deeper and deeper ore bodies. So if we go to the final slide, we believe that Newcrest has 6 key competitive advantages that set us apart in this industry as we seek to provide superior returns to our shareholders. Our unique long reserve life position, our low-cost production base, we do what we say, we have a multitude of internal growth options, we have strong technical and exploration capabilities, and finally, we're financially robust and are focused on remaining this way throughout the cycle. So Sophie, you're happy to take questions now?
Excellent. Thank you very much, Sandeep. We've got a few questions coming through from investors, so let's start there, mainly around Havieron. So questions are, what sort of future value upside from Havieron would you attribute to it? And then also following on from that is, you've determined Havieron as the gold discovery of an era. What differentiates Havieron from other discoveries to make it as such? And also, is the mineralisation similar to what you see at Telfer?
There's a lot in that, so let me try and
I know.
not necessarily you ask them. So let's start with the last one. So this mineralisation we think is quite different in many ways to what we're seeing at Telfer. For a start, it's much higher grade. I mean, we haven't seeing these sort of grades at this sort of volume in the Patterson. The reason we're excited, and you've seen all the drill holes, is that we have this high grade kind of it looks like a parabola on its side, where we think that the first mining will start, which will involve high grade stoping, which will truck to Telfer. So this is 10 times the grade of what we're currently treating at Telfer, and it'll come with much higher margins and lower costs. So I think there's a real fundamental economic equation there, which is when we do the PFS and confirm it all, will look pretty good. But what we're also finding, which we kind of didn't expect initially, is we're finding that the structure sits in amongst a lot of breccia material, and what we're finding is this material is also mineralized, not at the grade of the actual high-grade structures, but nevertheless, with our block caving and sub-level caving skills, this may offer an opportunity where we start off mining Havieron with a high-grade selective stoping methodology, with the ability, as we learn more and more about the ore body, to perhaps move towards a bulk-style operation. So both of those styles are being looked at in the pre-feasibility that we've started, but the critical path is to start the decline. If I could start the decline tomorrow, I would. So we're doing whatever we can to comply with the regulatory process in order to get a permit, including the native title clearance, etc., in order to be able to, on the fast track, start the decline, hopefully by the end of this calendar year or early next calendar year.
And then in terms of the scale of Havieron, potential scale?
Well, we're just working through that. We're just working through that now, Sophie. I mean, what we can say is the first stage, ideally, would be a high, as I said, a high-grade open selective stoping operation, and that would, it's hard to say. It'd be, I'd hope it's 1 million tonnes. Big stoping operations around 2. So if you think between 1 to 2 million tonnes, and you look at the grades that we're seeing, that's quite a bit of ounces in a small amount of material. And but it's too early to give the economics around it. We're working it out now, but we're excited about it for a reason.
Okay, great. And then another follow-up question from the audience. Your peers, Barrick and Newmont, are forecasting sustainable production bases for the next 10 years. What would be the target long-term sustainable gold production rate for Newcrest?
We don't think about it in that terms. We think about it in terms of making money and returns, and that's why, stable production, if you're not making money on the marginal ounces or your costs are high, doesn't necessarily fit what we're after is make as much free cash flow and returns we can for our shareholders. And if you look at our profile, it will fluctuate. As we've got projects like Havieron coming, we've got Red Chris coming, Wafi-Golpu coming. I mean, they're all new projects, and they will all have their various grade profiles, and our production will swing up and down with those profiles. So I don't think setting a number and just setting it constant, ore bodies don't work like that. You have to work them to make the most money that you possibly can. That's our focus.
Mm-hmm. And then maybe could you talk through how the board and management think through capital allocation? There's a lot of opportunities, internal growth projects now on the table at Newcrest. What type of overlays do you apply to the numbers? And how do you prioritise those projects internally?
Well, I mean, obviously the priority is our safety and sustainability projects and sustaining capital for our existing business. That's where the money goes first. We have a dividend policy. We have the minimum dividend, so that's the next cab off the rank. Any dividend over and above that is something obviously the board determines as per our policy. And then it's about which of the projects deliver the highest rate of returns and the most free cash flow, and how do we balance that capital profile. So if you take our specific circumstance, these projects I talked about, they all have different timelines and different levels of capital spend. You've got two projects, for example, at Havieron and Redcrest, that require mines. They don't need infrastructure such as processing facilities or tailings dams or anything like that. They already exist at Redcrest and Havieron. At Telfer, the true greenfield project is Wafi-Golpu, which has a slightly longer timeline of 5 years from starting the decline. So I think in amongst all that mix, the board looks at those opportunities and our obligations and determines what the best allocation is at that time, given the opportunities in front of us. And obviously, maintaining a strong balance sheet through the cycle is something that we've demonstrated that we want to stay with that both now and into the future.
Okay, let's maybe talk about Cadia. Capital intensity estimates appear to be the biggest hurdle to go to 40 million tonnes per annum. What are some ways you can potentially push through this?
Well, look, at the moment, we believe that 35 million is about the optimum answer right now for the size of Cadia. But as you know, this mines always find ways to improve. Processing plants always find a way to improve. So there's no doubt we'll see creep that comes into the operations. But technology, I think, is part of the answer to do we go beyond 35. So, for example, if this undercutless technology that we had a successful trial at Telfer, we're now going to trial it at Cadia. If that can knock 30% off the capital cost of a macro block, that then helps think about the operation a little differently in terms of rate of return and free cash flow. But also, if you combine that with some of the ore sorting and mass sensing work that we're doing, is as the grade of Cadia drops, if we can separate the materials such that the waste is, or part of the waste is eliminated before the high-cost milling starts, then you start talking about higher numbers in terms of mining rates without necessarily processing more through the processing plant. So because of the long life of Cadia, we've got the time to focus and develop these technologies, and if they come, then they can be implemented with a great return.
Mm-hmm. Just returning back to Telfer and Havieron, these questions keep coming through. So lots of interest around the project or around the prospect. Would you consider a buyout of Greatland Gold? I guess here the investors are sort of seeking, would it make sense for you to own 100% of Havieron? Can you get 100% of Havieron? And I guess what would be needed to do that?
Look, at the pathway now, we've got a clear pathway to get up to 75%. And look, I can't speculate on what may or may not happen in the future, but, we have to, on all investments, we look at rate of return on the capital we spend, whatever form of investment it is. And that would play a key role in whatever we may or may not decide to do in the future.
Okay. And then just in terms, we know it's early days in terms of the drilling, but in terms of the estimated life that you could add to Telfer through Havieron?
Oh, that's a tough question. Now, we haven't even put a resource out on it yet, and then obviously a key part of that is the mining rate, and in a high grade stoping operation, you've got to think very differently. I mean, where Telfer treats 16 to 20 million tonnes an hour, ultimately, once that ore body goes, and then we're treating Havieron only, and there may be an overlap period as well, it becomes a different way to think about it. But if you just look at the grades, the simple answer is too early to tell. We're onto a PFS. We expect to have that in the first half, around the middle of next year. But the initial resource, right, and that's really important to dictate what sort of mine life we might be expecting. We expect in the first half of FY21, so before the end of this calendar year.
Okay, great. Hopefully that timing is good for the audience. Let's turn to Wafi-Golpu. Again, another.
We've got 9 drill rigs. We've got 9 drill rigs on it, Sophie. So we're drilling as fast as we can.
I know. Okay, let's turn to PNG, Wafi-Golpu. Another question coming through from the audience here. One of your peers is having issues with its ownership, with its mine in PNG. What's the situation with Wafi, and when will Wafi be in production? Maybe if you just step through the next steps for you.
Well, the next steps are to arrive at that agreement with the government. If you recall, there's a hiatus in the discussion as there was a legal stoush, if I can call it that, between the Morobe province and the state of Papua New Guinea. That has now been set aside. So there's keen interest from what we've heard, certainly from the Prime Minister and his people, about restarting those negotiations. I have a view that post the COVID washout, projects like Wafi-Golpu are going to be even more important to PNG in terms of stimulating the economy, along with the potential LNG projects that are there. So I think there's a win-win there. We've got to get the fiscal stability agreement and the development agreement with the government. We would then be in the position to start the decline. This is a shovel-ready project, and our estimate is that we'll get first production from 5 years from starting the box cut at the mine itself. And the other thing, it's been confirmed by the PM and the government that this will be under the 1992 Mining Act, which is the existing Mining Act, and the license term under the 1992 Act is 40 years, with obviously options for renewal.
Okay, great. Let's turn to Canada. Red Chris, the Canadian government, another investor question coming through. The Canadian government is spending heavily on stimulus programs within Canada and also globally, such as funding the World Health Organization due to the COVID pandemic. This could lead to higher corporate taxes in Canada in the next few years. Could this impact your profitability at Red Chris or go forward over there in terms of timing?
Look, I mean, if tax imposts are high enough, there'll be a distraction of investment expenditure right through Canada, which is, I'm not sure that's what the government wants. I think part of the answer in Canada, as everywhere else, is actually stimulate investment as opposed to discourage it. But if you look at the grades that we're seeing, again, we're doing a PFS and the economics around it, and we still have to incorporate our drill data. One thing that it may not be fully understood is we're progressing with using the imperial data. We can't produce a PFS without a JORC compliant resource, which is we're in the middle of doing right now, and it'll be that drill data along with the old imperial data. So this includes the holes that we've been publishing into the PFS. And I have every expectation that that'll be a very robust project. If you think about it, it's a mine only. You've seen the grades, and the infrastructure on surface already exists, including a tailings facility. And some of these grades are higher than Cadia East.
Mm-hmm. Let's maybe have a last question on Lihir. It's the one asset that we haven't paid too much attention to thus far. Just looking forward, grades at Lihir are likely to be impacted over the next 6 to 12 months. What are the learnings here, given, I imagine the sequencing of mining will become even more challenging from thermal issues going forward?
So I think we got caught on phase 14. As we're moving in from phase 14 to 15, it was a tighter phase. We knew that as we're going deeper into that particular zone. But what happened with the geothermal outburst that we had is it pushed us into a much tighter corner. Now, the grade is variable at Havieron anyway, and this is why we normally have much larger benches, multiple places to draw from. So we form a blend. We call them the broms, and then we feed it through to the crushers. So that's restricted our ability to do that. So we've seen the full variability and the tight mining. That's what's influencing us. So as we sort of literally dig our way out of that over the coming months, we should see a lot more stability in the grade and in the operating performance.
Okay, excellent. We're running out of time, so I want to thank you, Sandeep, for your time today, and also thank you to the audience for submitting all the fantastic questions. It certainly made my job a lot easier today. So thank you, and enjoy the conference, everyone.